Everyone, welcome to Smart Investing. I'm Albert, the host of the channel, and today I have some bank stocks for you. It's only 3 bank stocks. We're going to jump right into it. So we have ticker symbol CATY, BBVA, BHLB. We're going to start from the bottom, work our way to the top. Markets are closed. Today is June 19th, 2023. It is 12:46 p.m. Markets are closed, and we're just going to go over some stocks. See if they're good or if they're bad or if they're doing okay. So we're going to do some evaluation. We're going to do some fundamentals, technicals, and some quants. So first page that I have here is CATY, so it's at $34.02. The market cap ain't too bad. Very respectable by Wall Street standards. The volume is at 800K, so doesn't seem too bad. It's pretty active. 52-week high and 52-week low. Decent movement for the year. I've seen better, but not bad. PE is undervalued. Dividend yield is at 4%. Dividend payment is at 1.36 for the year. Earnings are at 5.1, close to 5.2. And we have a price to book under a 1. Whoops. I'm looking right here. And then a price to sales at 3. Looking at the chart for the 5-year, it looks pretty bad. We have recently gotten that uptrend. So from here, 29 to 34, as you can see, that movement up, but then as we can see here, it's still a long way down. So I'd say still not even halfway to the high. So it still has a bunch of movement to go up again in order to catch up for it to gain some market share. Still under its 200 EMA. 200 EMA right now is at 36.43. Those are the numbers that I have. Let me go down the time frame again. So 36.54 on a 1 year. So that's pretty accurate. So yeah, 36.5 you can say. Then on a 3-month chart, looking at the EMA, it is at 34.50, so that's a $2 difference. And then the 1 month, it's showing that it's beating its 200 EMA. It's a little off. Yeah, it's a little bit off. So I'm gonna say on the 1 year, yeah, 36.50. Now on the 1 month, let me go back and then go forward again. So on the 1 month, it is still under its 200 EMA, which is at 36.8. I have 36.9 to be exact. And then on the 5-day, it's been bouncing back and forth, up, down, slightly up, then down again. It looks like it's more down than up as of this week and as of right now. So again, it still has room to move up. I'm not counting on it. So so far I don't like the chart. I mean, it has potential. There's some activity in the volume, which ain't bad, and it does have that uptrend and movement. So possibly it can be a day trade. We'll see what happens if it's still active. And apparently for it to be consistent to gain market share, the overall market has to be favored for bank stocks, and I don't see that happening. So it's just harder for the stock to move up. Apparently, it might be a short-term trend, maybe for a few months, but that's about it. It might. I don't want to say it'd be too late, but it's it's not as popular as other stocks right now. So, let me look at the quants. I almost skipped the quants. So, apologize for that. Highest rating for the quant is quality. Second was growth at 7.53. So quality, they rated it a close to 8.3. I don't know why. Financials, let's look at that. Let's look at why they've rated quality so high. I would assume these guys are in a major city. Let's look at their cash flow real quick. So, wow, these guys have awful cash flow, negative cash flow. They're like negative $1 billion in cash flow. Even with the net income, it's nowhere near to even pay off some debt. These guys are just running on a negative balance, really. And they have lowered expectations. I would hope so, based on the negative balance and income. So I'm even scared to look at the dividend. I wouldn't be surprised if they're going to cut a dividend. And they're not. They raised the dividend from 2021, and it has stayed flat and pretty much the same up until now, 2023. So the last raise was actually almost 2 years ago. Almost 2 years ago. So there you have it. And for this stock, obviously I'm going to say no and move on to the next one. I do want to see real quick if they list. Okay, so it says it's in California. I wonder if it's near a major city. That would actually help. But I'm sure there's a lot of big and small cities in California. So California alone, I don't know. I guess you consider it still a major market in finance. And also, I guess it still has some popularity and momentum in it. Sorry, I'm just kind of brainstorming and then also reading this. So again, maybe it's kind of good reviews. I don't know who has this bank. I've never heard of it on the East Coast unless they're a regional bank. Probably they are, but I mean, like, I don't know if they some banks you don't really see like outside in the real world. They might have very, very little locations, and definitely I haven't seen none of these banks. If it was if it's $1 billion bank, you would think, okay, maybe they have several locations on the West Coast or whatever. It doesn't say any locations, but it seems like a regular business model. They're doing loans to residentials, they're doing construction loans, real estate. They're helping build communities, installment loans, household and other consumer expenditures, mortgage loans, commercial loans, home equity lines of credit. So it looks like they're very heavy on the housing and commercial. So I don't get it. I just don't know. They're running a negative balance sheet, but again, I just don't see how they're a $1 billion company. I wonder, when did they start business? So it's telling me 1990. That might be inaccurate. That could have just been an update in their logo, and then all of a sudden, the last time they actually drastically changed the company entirely, it might have had a name change or whatever and a different logo, but it's still considered the same bank entity. So other than that, I don't know. I just can't tell you the quality of the bank until you're actually a customer or I guess a representative for them. So I wouldn't know. They rated it 8 point whatever, 8.3. So I don't know. So moving on to the next stock, ticker symbol BBVA, Banco Bilbao. Did I say that right? I guess. Whoa, okay. That really pops out at me. And the price is pretty cheap. $44 billion market cap company. I have never heard of this bank. This is a mid-sized bank. So 52-week high and low. That's a very low range. That already tells me that's not a popular bank. People don't like it. Earnings are pretty weak. Hold on. Oh, sorry. Let me move my face out of these numbers so you guys can see. So dividend yield is close to 10%. Dividend payment is at 70 cents. Price to sales is at 1.1. Price to book 0.85. That's obviously telling me it's undervalued. But the market cap and then the volume, very, very active stock. This stock definitely has potential to be a day trade. It just doesn't have, the movement I'm looking for. I would like this stock to break new highs. If that makes any sense. Once it breaks new highs, so the high is at 793, the stock is at 745. Once it breaks over 793, I think some people will be very interested in this stock, and maybe this stock might even go past that. Again, I've mentioned before there are better opportunities out there. I think this is one of the very rare opportunities for this stock to, and I mean very rare because of the banking sector, and then apparently with the whole fiasco still. And so it's still pretty cheap. I mean, even the high of the 52-week high is not even above $10. I'm sure a lot of people will like that. I know I would like that to jump in. We have the 5-year. It dropped down a little bit, but then look at these huge moves. Look at that big leg up. Another big leg up. It went straight down here, but then it picked up right up again. And that was in, let me see, what was the date for that? So that must have been the exact date. Let's see. So that must have been in March. So yeah, mid-March. All the way to pretty much 1 month later. Then it slightly went down. Then it's starting to tick back up again. But again, it needs to break new highs. I do like the chart. As for the first page and the numbers, I mean, it's okay. It needs a lot of work. But knowing Wall Street, they like this, the market cap, and they like the volume. And obviously this price here, pretty cheap. So 3 major factors here. Check off all the boxes. And yeah, I mean, even the chart is look at that. You have this one move up, then it's flat, then another move up. Then for the most part, starting from around March, it went down, but then it picked up again. So pretty much for this year, it's gone up for the first 3 months and pretty much it stayed flat. So it has a lot of potential. I would assume the momentum is very high. And like I said, I would definitely agree with that. Quality, they rated this at 8.5. With the last stock, like I said, that was a $1 billion company. I think I'm starting to notice the trend for the quality. I think Wall Street likes whenever it's a big company, a $1 billion company, and maybe something decent about the company that they're still holding on. I think they rate that as a quality company because I wouldn't say it's too big to fail, but it's definitely one to succeed just because of the market cap. So, moving on from the quant rating, we're going to look at the rest of it real quick. So, growth, I don't really see growth. The only growth I see is basically the share price, like I said earlier, rising above the 52-week high. So, they would actually gain some market share in that if it breaks new highs. Now, earnings estimates we have here, 20-cent range. It looks like they met all their estimates, or maybe I'm not getting estimates. Last estimate that I got was for Q4 2021. I don't see any grays in here, so I can't really tell if they met or beat expectations since 2022. And I'm not getting anything for 2023 and beyond. So when I look at some annual numbers here, so it's pretty weak for their numbers. ROA, ROE, earnings are still pretty weak. Their margins have gotten better ever since 2021. Those are decent margins, actually. I'm sure they won't have those margins for this year, definitely. Then the debt, 92%, that's way too high. Net income is at 6.83 billion. So let's look at their cash flow. So -4. So we have 7.5, 7, 8, 9, 10, 11. So yeah, they definitely have positive cash flow, which is a good thing. Definitely a good thing. This company can actually afford to give a raise in their dividends, unlike so many other banking companies. So with that said, we're going to take a look at that. They have given a special dividend. I'm surprised. It was only a penny. So anyhow, they only gave one payment for 2023, which was only 33 cents. They're very, very conservative. And if we look at their history, they don't do large payments, and if they do, they only do it twice a year. So they're very, very conservative. In 2017, only 2 payments. 2015, 2 payments. Then 2018, 2 payments, 2 payments, 1 payment. That was a rough year. Then we're going into 2021. That was a rough year. 2022, that was a rough year. I mean, this was a good year. This was a bad year. 2023, still a rough year. And they paid out. So this company, okay, Argentina, a Spain-based bank that is diversified. So they are, I wonder where's their corporate. So anyways, they're international. I'm just wondering where the corporate headquarters are. So it says they have locations in Spain, the U.S., Turkey, Mexico, South America, rest of Euro-Asia, so Europe and Asia. So they also do insurance. Definitely a big factor when it comes to banking. No wonder they're cheap, because our dollar's worth more. So I'm sure Americans and capital firms and Wall Street, they're not going to support international companies. That's just the way they work. But it does have potential, though. They like trading this. You could see in the numbers. The numbers say it all. I mean, the volume is there. The price range, I can't really tell. It has very low turnover. meaning people hold on to it more than they actually sell it. So it's not hard to sell, but people are more willingly to hold on to it for a longer period of time, if that makes any sense when it comes to the turnover rate. I don't know how long that can vary, but it could just be for whatever time frame. I know they fill out forms and all that months beforehand when it comes to the firms and hedge funds and all that. But very interesting company, very interesting. So now that I know it's an international company, I don't know. It's tricky. It's very, very tricky. I don't want to say no, but then I don't want to say yes. I think I'm gonna say watch list it. I think I'm gonna say yes to this one and watch list it, just because it has that potential and they don't have negative cash flow. They're very cheap. They're just not liked by Wall Street. Obviously, it sucks to not appreciate companies just because they're not American. I mean, that's just the way Wall Street likes to play it. I just don't see it like that. A good company is a good company to me. So I don't know why Wall Street is so one-sided when it comes to that. I just don't get it. A good product is a good product. So yeah, it's gonna be very hard for it to pass the 52-week high. So anyhow, moving on to the next one. Last one is BHLB. The name is Berkshire Hills Bank Corp. I do not think Warren Buffett owns this bank. I know people might be skeptical or have a question about it. Almost $1 billion market cap. Decent volume there for 600K volume. Share price, I'd say it's affordable at 22.55 cents. And the rest of the first page, let's see what we have here. Let me move my indicators there, my little signals. So we have earnings at 2.2. Not much range. Well, it's understandable, but that was only for the day. And then price to book is 1. Price to sales 2.3. Slightly undervalued. Usually price to book, if it's 3 or under, it's a good deal. I believe if it's 3 or over, it'll be undervalued. If it's around 3 or close to 3, like, slightly in that slight movement, then it's still fair value. So that's what we have. So 3% dividend yield, 72 cents for the dividend payment for the year. Crappy payment. We're going to move on to the technicals. Look at the chart. Let's look at the 5-year under the 200 exponential moving average. The EMA is showing me at $25.71 for it to be out of the woods for an uptrend. It's still in that downtrend. Again, banks are still in a decline mode, so it's going to be very hard for it to gain momentum. We have here this big drop in March, then another big drop all the way in April. In May, it stood flat. Then in late May and early June, it started to pick up, which I'm surprised. August is usually a really bad month for stocks. So is May, which I'm surprised. May did okay. But again, we still have July, the end of June of this month, and then we still have July, which is now when we're going to enter into the summer. And then September as well. So, again, I don't like the chart. It's still on a downtrend. I don't see potential for the stock. That's just me. But to each their own. Wall Street is rating this mixed signals. Very, very interesting. Very, very rare. You usually don't see mixed signals from Wall Street. You have like 20% strong buy, 20% buy, 40% hold, 20% sell, and 0% strong sell. Very, very interesting. Quant ratings. You could click at that. You see the movement for the quant ratings. I want to go, you know what? I want to see quality. Okay, so this is what they consider for quality. Now that I was actually questioning myself. So they look at operating margin. I don't really care about that. ROE, I understand. The change, I look at that. Return on invested capital, I look at that. Return on investment change year over year. That would actually, this would actually include the share price. That's really the share price and the stock. Outstanding shares, and then they look at total debt equity ratio change. So this last part, I actually look at the balance sheet. So all these percentages and these little ratios with the decimals and all these outlier numbers, like all these extra numbers, it's just I see that more as a distraction. Like I'm basically talking about the same thing, but they're just wording it differently, and they're just showing their numbers in a different format. You know, that's like saying, that's like me saying, oh, they cut this stock in half. But then Wall Street likes to confuse it and say, oh yeah, we cut it by 50%. Or they want to do it in decimal format. Or they want to do it in ratio format. Oh, 2-to-1. Or like 1-to-2. And like, it's just, it's stupid. It's kind of bogus. I mean, I get it, but it's just more confusion to simplicity, as I like to say. So with quant ratings, they gave the highest rating for momentum. Momentum, I wouldn't give it the highest rating. I can sort of see that, but not for this stock. I think it's slightly high for that number, a 6.2 or 6.3. I'd actually like to see what quality it has. I mean, it does have the 52-week high and low differential, which I think is pretty decent. Not a lot of people notice that or know how to evaluate that. The reason I'm good at it and I've seen it is because obviously I do so many evaluations that I started to notice a difference between what would be a high and low and basically the average number between that. And people aren't looking at that. But again, I use that to my own advantage. So looking at the debt, 91%, their margins at 22. I'm looking at the 2020. That is just awful. So with 2020 alone, that just pretty much devastated this company. And that's kind of a hard pill to swallow. So meaning that's a hard loss to get over, is what I'm pretty much saying. So I wouldn't be surprised if they have negative cash flow. That's just me. Just by looking at that loss in 2020, 92 million in 2022 for the net income. It was lower in 2020. Sorry, it was higher in 2021, but it got lower for the year after. And 2023, I'm sure it's going to be slightly lower or about the same. Cash flow, let's see what we have. So we have about, yeah, at least 600 million in cash flow that they're down negative. So definitely this company is a no. So there you have it. I said watch list to this one, no and no. Thank you guys for watching, and I'll see you guys in the next one. Actually, I'll see you guys pretty soon. I got like 4 more videos. I'm gonna take a break, probably eat some lunch, workout or whatever, and I'll catch you guys soon. Thanks for watching.